Okay, hi there. Welcome to a data response answer to a question about the takeover by National Express, a leading bus and coach company, of Stagecoach in the UK. This happened in the autumn of 2021. So here's a couple of extracts and some data for you. This is a deal where National Express took over Stagecoach, creating a £2 billion revenue transport group with 40,000 vehicles and about 70,000 employees. It's going to be a significant player in the market. Under the deal, National Express shareholders own about 75% of the combined group, Stagecoach 25%. Aims to cut costs by about £1 million a week following the merger. Analysts say the need to decarbonise adds a further incentive for transport providers to consolidate so they can afford investments in expensive electric and hydrogen vehicles, moving away from diesel. It's been a tough time for bus and coach companies. Number of people using buses has fell 61% during the pandemic. There's also been a long-term decline in bus use. Lots of unprofitable services are being cut. And bus fares actually have gone up by well above what's happened to rail fares and for general motoring costs. So there's been a big increase in the relative price of bus fares. The bus fleet in the UK is fairly old, an average 8.5 years old. About half meet current EU carbon emission standards. Most now have the ability for people to pay by contactless card. Only a quarter have Wi-Fi and 80% are diesel engined, which clearly going forward is a major issue. And here's the market share for the bus providers, regional bus providers. And you can see that Stagecoach was leading, first group, second, National Express, relatively small in terms of the bus market share. But it's just bought Stagecoach, of course. Now, there's lots of questions you could ask. I may well do a couple more different style questions based on the same data. So here's the first one. Assess the likely advantages for National Express of its takeover of Stagecoach. So for a 15 marker, you're looking to build essentially two advantages, two paragraphs: knowledge, application, analysis, arguing that this takeover could be beneficial for National Express, and then interspersed with two evaluation paragraphs questioning those potential benefits. Okay, so here we go. Here's a possible answer. It's not perfect, but I think it's a pretty good one. Let's work through this and walk through this together. First, KA paragraph, knowledge, application, analysis. The takeover is an example of horizontal integration, make that clear. One likely benefit is that with a business of 40,000 vehicles and now a combined market share of 33%, so I'm going back there to the data in the extract there, just adding the two numbers together, they'll be able to exploit internal economies of scale, key concept. Then apply that idea. Examples might include purchasing monopoly power when buying fuel, or for example, bigger businesses have the financial clouts to hedge in the fuel market to reduce uncertainty. So they have a risk-bearing economy, a purchasing economy. Better deals when replacing buses. So there could be some significant scale economies. As a result, their long-run average costs will fall, and this will lead to higher supernormal profits and potentially better returns for shareholders. This is shown in my analysis diagram. That's a nice phrase to put in, by the way. Just leads the examiner straight away to your diagram. Let's just build it up. So hopefully this business can achieve scale economies. They can move on to lower cost curves. As a result, we throw in an average revenue and a marginal revenue curve. The profit maximizing output will go up from Q1, price P1. And if the cost is C1, then that's the level of profit. So if they can achieve big scale economies, they can increase their profit maximizing output to Q2, charge a lower price P2, and also, of course, they've got much lower unit costs. So the total level of profit is now much bigger, shown in the green area. Original profit shown in orange there, new profit shown in green. So in theory, one of the big benefits will be higher profits because of economies of scale. However, in evaluation, there is no guarantee that a takeover will actually achieve the scale economies predicted. Indeed, there's lots of research which suggests that many acquisitions ultimately fail to generate the shareholder returns expected. And one reason one potential explanation for this is the risk of diseconomies of scale or long-run decreasing returns. But then you have to build and sustain that argument. So here it is, the merged business will have 70,000 employees, bit of application there. And in such firms, big organisations like that, the costs of monitoring worker productivity, the challenge of maintaining good morale and industrial relations is often high. And there could also be clashes of managerial culture between the two firms. So hinting at some potential diseconomies of scale, they lead to long and average costs going up, which in the absence of higher fares will lead to a fall in operating profits. Now, my previous diagram was really quite well developed. You could put in a diseconomies of scale diagram. So there's 3 different average cost curves, and the long and average cost curve, of course, is the envelope curve that goes around it. When long and average cost is falling, there are internal scale economies, but when average costs are rising, there are diseconomies of scale. And that, of course, in theory, could lead to lower profits per unit. Second KA paragraph, don't forget we have to build 2 of these, 2 evaluation points, and then that's done. You're done in 15 marker. A second advantage is that the combined National Express Stagecoach business will have an annual turnover of 2 billion, bit of application there. And as they're listed on the stock market, they will be better placed to go to the stock market and raise equity capital through share issues. Now, this is a relatively cheap form of finance. It's certainly cheaper than borrowing the money and helps to avoid excessive debt. So the big advantage here, they can go to the stock market as a bigger business and raise funds more easily. And how might they use that money? Well, the extra finance could be used to invest in a new fleet of vehicles, including electric and hydrogen vehicles, so that more of them meet ultra-low emission standards and accelerate that shift away from diesel-powered vehicles. I'm arguing here that this investment will help give the enlarged business a non-price advantage among consumers concerned about climate change and also those who can't afford to run their own vehicles, perhaps when the ban on petrol and diesel cars comes into force in 2030. Corporate social responsibility, or CSR, can be good for profits and shareholder returns in the long run, especially if the smaller bus companies, maybe Go Ahead, mentioned in the table, has less financial resources to invest and innovate. So second point, really, they have a bigger financial base to be able to make those research, to do the research, to make the investments, to give them a non-price advantage over rival operators. However, disadvantage, downside, Extract 1B says there's been a steep drop in local bus passenger journeys. They fell 61% during the pandemic. The long-run trend is for fewer people to use buses. Of course, if demand's falling, it's harder to achieve those economies of scale. For many consumers, bus travel is an inferior good with a negative income elasticity. And with more people working from home and in hybrid employment contracts, one might expect to see further declines in bus use. In this case, the merged business is a bigger business, but they're now facing falling demand and revenues. It's put a lot of pressure on them to cut their costs to reduce the risk of heavy losses. And I'm hinting here that, in fact, the takeover might have been driven not by economies of scale, but largely by managerial motives for bigger salaries, for more prestige, rather than a sort of cold calculation of costs and benefits. And often takeovers and mergers that are driven by managerial motives, by hubris, by the need to secure big deals and drive the growth of the business. This is often another reason why many mergers and takeovers eventually fail. So a good example to look at, horizontal integration, use the data, bring in economic concepts, build 2 KA paragraphs, and also 2 evaluation points. In a 15 marker data response for Edexcel, there is no need for a final conclusion. If you've written 4 good paragraphs, applied it and analysed and evaluated, you've done your job. There's nothing more you need to do. Okay, thanks for joining in. Take care, stay safe, stay curious. See you sometime soon.